All right, so here we go, guys. So yeah, a little bit about what we're going to be talking about today, the different components of aid offers, as well as the strategies we employ to compare these aid offers. Then we'll talk a little bit about the financial education side of things, so getting financial house in order, as well as what the student loan programs look like. We'll be primarily talking about the federal loan program, but we'll also talk a little bit about what options are out there beyond that as well. And obviously, throughout the presentation, feel free to drop your questions in the chat. We'll make sure that those get answered for you. So just jumping back in to give a little bit of an overview of the financial aid process. You'll start by creating your account, studentaid.gov, and completing the FAFSA and applying to those colleges. Likely at this point in the year, that's already been done, and you're waiting on some of those financial aid offers to come in. After the FAFSA is filed, the data is then nicely packaged up, just sent off to the colleges that the student has indicated that they're most interested in. And once they've been accepted for admission, that's when you'll start seeing those financial aid offers come in. That's really what we're going to be talking about today, is that portion, the comparing the actual offers themselves. And we'll be focusing on the net price piece. I'll talk a little bit about the differentiation between the two, with net price and sticker price as we move forward. But again, today we're really just going to be focusing on the net price piece, which is the actual cost to the student. After you've taken the opportunity to sit down and compare any aid offers that you've received from schools, that's at the point when the student opts to accept any aid that they wish to take. That's if acceptance is required. That varies depending on school. But definitely keep an eye out in terms of what those instructions might be to properly do that. So at that point, once the student has accepted the aid that they like, the school then processes the accepted aid. So what that means is they get to pull those funds down. They do that on behalf of the student. The school then may opt to have any sort of follow-up information that they might need. They may email or call. If there's any sort of documentation that's missing, I would say, don't necessarily wait for that follow-up. Make sure you're proactively checking any of the communications that the school is having with you. That can be in a number of different ways. They might send you a letter in the mail. It might be through email. It could even be through a portal that they've set up for the student. So always good to be on top of those things. At that point, any aid that the school has pulled down for the student will appear as pending on the bill. And as things shake out in terms of exactly how much that term is going to cost for the student, you'll get a better idea of exactly what the bill will be for the term that they're enrolled. At this point, I like to remind people that, this is a process that happens every year. So they're obviously going to need to apply for aid again next fall. So what that means is filing the FAFSA again. Obviously, you don't necessarily need to go through the admissions process unless you're going through a transfer in college, but generally, file that FAFSA again. It'll be available in October this year. So like I talked a little bit about, we're going to be focusing today as we're looking at these different aid offer examples, we're going to be focusing on a concept called net price. So net price is what truly costs the student 1 year to attend school. So net price is basically that larger price. Like if you were to Google, like, how much does it cost to attend UNE, for example, the amount that would come up is what's called the sticker price or the cost of attendance. So that's like encompassing how much it would entirely cost if you were to receive no financial aid, no scholarships, without taking anything into account. Again, the net price is minus any of that free money that you're going to be receiving from a school. So that would take into account grants, scholarships, any sort of tuition waivers, any other gift aid that the student might receive. So the reason why it's important to focus on that piece is because the net price is really individualized to the individual student. So it's important that you look at that because what one school might cost one family, it might cost something wildly different for the family sitting next to them. So it's just best that we focus on that piece. And a lot of the times I like to point out, even if the sticker price of a school is very high, it might actually at the end of the day cost less to the individual. So definitely something to just at least roll around in the back of your mind. So today, we're going to break out 3 different examples of financial aid offers. So again, after the FAFSA has been filed, after the student's been accepted for admission, this is likely something that they would either receive in the mail, through their email, or on a portal. So these have all been doctored slightly, just basically to, again, give examples of what an offer might look like. So these are real offers, rebranded a little bit. And we'll talk a little bit about, benefits, drawbacks, different pieces of information, and how to properly compare and read them, just to give you an idea of what it might look like throughout this process. So this is honestly a pretty well done financial aid offer letter. I really like to dig into and look at this one because they all have combinations of the same information, but this one does a pretty good job breaking it out. So if you're looking at it, you can get more of a holistic look of what, the school might cost you for 1 year. So you'll see a couple of different pieces here. You'll see the gift aid section, and that's indicated in the blue box on the aid offer letter. So you can see they actually do a great job breaking it up by fall, spring, and the total in general. Usually when you're comparing aid offers, you want to look holistically at the whole year, but it is a good idea, to see how that's distributed throughout the fall and spring. So you can see there are different line items for things like a scholarship. In this instance, it says Quidditch scholarship, but that might equate to some sort of sports scholarship maybe a student's receiving. There are also, scholarships funded by federal and state government and or the school. So maybe you would see like Maine State Grant in the gift aid section of an offer letter. And then that's also where any sort of tuition or housing waiver would appear. So it's important to understand the terms of these different gift aid offers. Like I mentioned, like a sports scholarship. So naturally, the student would have to continue and participate in that sport in order to be receiving that. Similar with sometimes the housing situation. If they're not continuing to live on campus, they might not receive that housing grant. So just really important to know the terms of the aid that you're accepting. Then you'll see in the green box there, that's what's referred to generally as self-help aid. Those are loans, federal government loans and work study typically. So we'll talk again more about the loan programs that will appear on financial aid offer letter if they're something that's being offered to you. But I really like that this offer highlights that the difference between gift aid being free money, the work study being like an earned paycheck, and federal loans needing to be repaid. A lot of offer letters don't necessarily make that indication when they break it out. And the reason why I think that's important is because an example is work study. If you shouldn't really be incorporating that in an expectation of how you're going to cover the cost of a bill. And the reason why is because that's not lumped in when it comes time to pay the bill. That's actually an earned paycheck that the student would learn throughout the semester. Would earn throughout the semester. So typically we suggest students allocate that for things like, maybe it's a cost of like their laundry or they're using it for food. Those are good examples. If the student's really on top of it, then maybe they want to save that money and set it aside for the following semester, but either way won't be able to be applied to that first bill that they receive from the college. And then in the purple box at the bottom there, that's where you'll see information about cost of attendance and sticker price. So you'll see the direct costs indicated on the left side and the indirect costs on the right-hand side. So again, this offer does a great job explaining what those things are. A lot of other offers just make the assumption that you know, which isn't great, especially if this is the first time that you're reviewing any of these offers. So the direct cost, again, those pieces that appear on the bill, you'll see tuition and fees and usually housing and food that are indicated on those lines, formerly known as room and board, if you've heard that term before. And then you'll see the indirect costs, and this is basically a catch-all, everything else in the budget. Indirect costs can range kind of largely depending on the individual and their family. So maybe that includes traveling. Maybe that would include like a flight to the school. Or maybe it's the student's going to have a car on campus. So those are really base estimations that the school just wants you to be aware that you should be considering. Again, those do not appear on the bill, but something that you do want to budget for. And then in the yellow boxes on the side, these are pieces that the award is based on. Always pieces that you want to double check are the assumptions. So did they list the student aid index properly? Are they an in-state student, or was that a mistake? Maybe they're an out-of-state student. So things to just check to make sure that those assumptions are correct, what they're basing it on. And so this is the second offer letter. So you can see it looks pretty significantly different than that first one that we looked at there. You can see that the assumptions area is much smaller. So all they have is, full-time living on campus. They don't necessarily explicitly state the SAI. So maybe something you just want to make sure that that's correct, that what they have is correct for you. You'll also see in the orange box there, that's the direct and indirect costs. So if you remember on the last letter, that was the portion in the bottom. So also broken out in like a fair way. They label it differently, obviously. So you would see estimated annual direct cost, and then you would see the possible additional expenses, which would be the indirect costs. It would be great if all of these awards were listed in the exact same format, so it was easy for you to sit down and look at one thing next to another. But the interchangeable use of these terms does make it a little bit more complicated. So having a good idea of like the different ways that these might be explained is a really good idea. So you can see obviously the expense is significantly higher for this school, but you're getting an idea of what it might look like here. So they break out the tuition and fees separately, where the last one, it was just, tuition and fees. They also have, the housing and food or the room and board listed on there. But again, these are all based on assumptions that, again, the student is going full-time and that they're living on campus. So just make sure that's correct. You'll also notice when you're looking at the financial aid that they all just lumped it together. It's not broken out nicely like the last one was, where you could see the free aid that was available. You could see, or the free money, excuse me, that was available, anything that was self-help money. So that student loans, work study. And then, so it's all kind of lumped in there. So definitely important that you sit down, have a look, make sure you understand which piece is what. You can see that there are a couple of grants on this offer. So you'll see a Pell Grant, a grant that is specifically offered by the institution, the one that's labeled college grant there. They also have the federal loans lumped in there as well, an additional scholarship, and then work study. So again, they put the work study included as total aid. Remember that that's not something that's going to be able to be applied to the bill. So just something to be aware of as you're looking at these letters, and make sure that you're breaking that out separately. This offer letter also provides information about how to accept the aid. That would be on the reverse side of the letter. But it's nice that they include that information right on there, in terms of what the next steps are if you want to move forward with accepting that offer from the school. And then this one is kind of, like a hybrid. It has some really good information, some really awesome benefits, and then a couple of drawbacks. So when you're sitting here and looking at it, it's really nice, again, that they break out the aid. So you have an idea for fall, spring, and totals. So what you're looking at there. I also like that they include information about other funding options, because a lot of other schools may not necessarily offer up the information on how to fill the gap. So here they give like the option of like tuition payment plans, or private student loan offerings, maybe military benefits. So that's where that information would be indicated on that portion of the offer, which again, is really awesome. Another piece that I really like that this offer includes is just notices about the awards, because it might look really good on surface, but again, you need to know about the terms of the aid that you're accepting. And that's, a big conversation that we like to have, particularly with students who are making these decisions. So having a good grasp on what those terms are is really important, whether or not a scholarship or a grant is renewable. Is it so whether or not the bill that you're going to be paying is actually sustainable over the amount of time that you're going to be in college. So having that breakup is really great. And definitely a benefit that I see on this type of offer letter. Generally, we have a really great tool that's available on our website, because if you're sitting down and comparing these each next to each other, it can be difficult to keep everything in one place. Obviously, everybody has their own organizational style, that goes without saying. But I really like to offer this tool up because I think it gives people the best of both worlds. If you're somebody who likes a digital organization, if you're somebody that likes having something on print, so you can either print it out and fill it out by hand, or it's actually an awesome dynamic calculator that does the math for you. So it's basically like a pre-filled Excel spreadsheet. So this is a really, really great tool that exists on our website. You can see it right again on our website, but I'll also send out the link after this presentation in the follow-up email, so you have access to that. We have it's kind of a two-sided worksheet. One side where you can enter information about comparing costs and the financial aid offers. And then the other side is information about paying the balance. So what other tools do you have in that toolbox once you've gotten through the aid portion of it all? So another piece that we like to point out is what to do in a situation of special circumstances. So say you filed your FAFSA and you get that aid offer from a college, you're looking at it and you're like, there is no way that I'm going to be able to fill that gap. We like to suggest to people that there's nothing wrong with contacting the financial aid office and discussing, their situation. Maybe if the information that you provided in the FAFSA, so you're using that old tax information and it doesn't accurately reflect where you and your family are at now, definitely let them know, but also let them know why. So whether that is maybe you've lost an income or there's unemployment that's happened in your family. The number of people in your household has changed. Maybe there's been a divorce or a separation, or you have high bills. So maybe you had to replace a roof on your house this year, or you have just a high rate of unusual medical expenses. And even one of the larger ones that used to be accounted for by the FAFSA but is no longer accounted for by the FAFSA are the multiple students attending college. So definitely worth reaching out to the financial aid office and letting them know of any of those changes. I'm going to pause for a second. And Flo, do we have any questions that have come in at all?
Nope, no questions right now.
All right, thank you very much. Yeah, again, if you're thinking of anything about the comparing aid offers later on in the presentation, feel free to put them in the chat. I'm happy to answer them whenever. But yeah, now we'll segue into talking a little bit about paying balance and what that looks like. So the Worthington Scholarship is always the first one we like to throw at people. This is, for a lot of people, it would be like leaving money on the table if you're not applying. And I actually think about it, and if this would have been available when I was graduating college, I would have graduated with no debt. So I'm always like, get out there, apply to the Worthington. This is a great option. There's still time to be getting this application in. The deadline is the middle of April. So definitely encourage everyone to apply to this that meets the requirements. So I put some of the requirements right here on the screen. Also, obviously, a link to the Worthington Scholarship page itself, but it's worth up to $20,000 over the period of 4 years. So therefore, it's a renewable scholarship year after year, which is great. They've upped the eligibility for SAIs of $30,000 or less, which is pretty high SAI for people to be eligible. And I also love to share that last year, over 80% of the applicants received the scholarship. So it's not like this is necessarily like a huge reach for individuals. They really are trying to provide financing for school. So it's a really, really awesome program. I suggest you check it out. Another scholarship organization that we like to share information about is Maine Community Foundation. They do great work there and offer a wide, diverse amount of scholarships. So it's a great place to go and have a look. It's really great. You can actually go on, fill out a profile about yourself or your student, and it'll automatically match you to scholarships. So they do a great job with that there. You can also search by region, so anything that might be specific to the area in which you live. Again, lots of diversity, not just for high school seniors, but sophomores and beyond. So definitely worth checking out that resource. And then this is our website. So this is the scholarship resource that we offer up. And it's not just the searchable tool, although that is really great. We have a pretty exhaustive list of scholarships that are available for Maine students. You can search them based on, whether you're a high schooler, a college student, an adult learner. You also have the ability to search based on major on our website. And yeah, so this is a great tool, but we also have general information about scholarships and different scholarship searches on this page as well. So a really good one-stop shop to check out. And then this is one we wanted to throw in there just to make sure people were aware of. So this is a scholarship. They actually offer 15 of them, and they're for $5,000 renewable scholarships. So definitely another great opportunity there. So worth basically just as much as the Worthington. And it can actually be used in schools outside of Maine, which is, definitely a component that some students might particularly find appealing. So definitely worth checking this one out. This is the Richard H. Pierce Memorial Scholarship. So you can either, look that up, or we'll share information after this presentation about that scholarship as well. Alrighty, so now that we've talked a little bit about scholarships, after we move past the free money portion, what we're looking at in terms of paying the bill, there are the option of tuition payment plans. I love to point this out because I'm always surprised about the number of families who are not aware of tuition payment plans. It's kind of a well-kept but awesome secret. So if you do have money that's available in your budget, so maybe you can reallocate a little bit of maybe your savings and put it towards the actual bill at school. All you'll do is get in touch with the financial aid office and let them know that you're interested in a tuition payment plan. And these are interest-free tuition payments that you make throughout the semester. Again, no interest, just a small enrollment fee. So if there is money in your budget, this is a great opportunity to, funnel a little bit less over to those student loans and more and proactively avoiding those interest payments, which is great. Other than that, think about different ways that you can find money in your budget. So just consider, maybe moving some of that money around, whether it's, your child is moving out of the house and going to college. You might have then a little bit of extra money in your budget for whether or not it's, feeding them, housing them, less money in your electric bill. How are you going to plan on channeling those funds? Maybe you'll be able to use that towards college payments or tuition payment plans. Also just generally getting your financial house in order. So prior to your child going to college, we always suggest that people do their best to pay off any debt if possible, because then this can free up some more money in your budget to divert towards maybe something like a tuition payment plan. And then obviously we can't overstate the importance of saving. So whether or not that's the parent or it's the student, but how is the student going to contribute as well? So looking at student summer earnings, what is their plan for that? And exactly how are they going to use it? We also like to point out that it is never too late to start saving, even if your student is a senior. Like a good example is, the Next Gen that we have available in the state of Maine. You get $100 initial matching grant just for opening the account with $25. So if you haven't made access to that, you're just leaving money on the table. So definitely worth checking that out as well. I'm going to pause for a second. Flo, do we have any questions? Yes, okay, yes, absolutely. So I see, I had one question. Yes, I can send you the PowerPoint. Okay, so let's just keep moving here. All right, so then are the educational tax credits. So this is definitely a great area to check out. I make great use of some of the state of Maine tax credits as well. But particularly for parents or anyone who has a dependent in college, there are tax credits that are available, like the American Opportunity Tax Credit, as well as the Lifetime Learning Tax Credit for any sort of college-related expenses that you're experiencing again while your student is in college. So again, those would be for specific educational qualifying expenses. Not a tax expert, but definitely worth mentioning to your tax expert that this is something that you're interested in. There are also a fair amount of tax credits that are available for students after they've graduated. So whether or not that's a tax credit, the federal tax credit for interest deduction, as well as Maine's loan repayment tax credit that's available. Definitely worth checking those out and a great way to save some money on education. My goodness. Letting me skip. All right. Okay, so now we're going to make a transition into talking a little bit about the federal student loan programs. So I feel like this might be an area that people might have questions. So please let me know if you do. We're going to cover it at a pretty high level today, but I want to make sure you have access to all the information that you need. So the federal loan program, they're called direct loans. That's primarily what we have access to now. In the past, they've been under, several different names, and there have been other programs, but now we're under a direct lending program. These federal loans are funded by the U.S. Department of Education. And in order to be eligible for them, the student has to be enrolled at least half time. So that's definitely a component there. One of the benefits of the direct lending program is they offer a 6-month grace period before they're required to restart repayment, which is really awesome. They also have other benefits like a variety of different repayment plans. So depending on what works best for you, you could have anywhere from a 10-year to a 25-year repayment period. There are income-based repayment plans. There are standard or gradual payment plans. So you have additional flexibility when it comes to that. There are also other benefits such as like forgiveness, deferment, and even forbearance programs that are available again that wouldn't be available for private lending. So based on all the benefits that are really offered with the federal loan programs, we usually suggest that people have a look at these and consider them before they consider other types of borrowing. Alrighty, and so you'll basically see it basically is broken up like two different loans. You might have noticed that on the comparing aid offer portion, but you'll see direct subsidized as well as direct unsubsidized loans. So the major difference between that is basically the way that interest accrues. So for direct subsidized loans, the student or the person who's actually taking out the loan won't be charged interest while enrolled at least half time until they've either graduated or stopped being in school at that halftime status. They get a 6-month grace period after they've left school. And then there's the unsubsidized loan, which is really similar, except for the fact that interest starts accruing immediately once the loan is dispersed. So basically what that means is the second that the funds are then pulled down by the school on your behalf, interest immediately starts accruing. And I will show you a little bit about the difference. So the reason why they're broken out separately is because you're eligible for different amounts depending on what year you are in school, your dependency status. So there are a number of different ways that this will be factored in. I like to give this example because it's a very, very common situation for individuals. So in the instance that there were a dependent undergrad student, you are eligible for up to the $5,500 loan limit, basically. That increases with each year that you attend school. So your second year or your sophomore year, they'd be eligible for 6,500 and then 7,500. They increase that amount because there's almost this assumption that, you know, like you're likely to have higher amounts maybe of scholarships the first year that you're in school. Maybe your educational expense is a little bit lower. And then those things change over time. You can see in the second column of basically how it's broken up, how much can actually be that subsidized. So again, that's the amount that doesn't accrue interest until after your 6-month grace period. So that's what you're looking at there. So it can be up to $3,500. So the unsubsidized portion would be $2,000 to make up that total 55. So similarly, you can see that independent students, they're eligible for basically a larger loan limit. They're not eligible for any additional subsidized. It's really just expanding the access to the federal lending program in totality to see that they can cover their educational expense. The other thing I like to note is that this is only for students whose parents are who are able to obtain PLUS loans. If they were denied for a PLUS loan, then that would alter these amounts. But this is basically just a look at how that might look for a dependent or an independent undergrad student. All right, I'm going to pause here for a second. Flo, do I have any questions?
No, we had one question about they wanted the presentation to be sent, and I said that you will send a follow-up email with the
Okay.
presentation. So that's all.
Okay, great. Thank you.
Welcome.
Alrighty. Now the part that everybody wants to talk about, which is the interest rates. This is very, very interesting for folks. So the way that this works for the federal loan program is that interest rates are determined each spring and then they become effective in July for the upcoming year. So basically that'll be happening soon here. We'll be finding out what the interest rates are coming up. And once that interest rate is determined for the loan, it is fixed and then it is assigned to that loan for the life of the loan, which is really great. And that's very desirable for a lot of borrowers. Again, interest starts accruing on the unsubsidized loans the day it's dispersed. But interest payments aren't required to be made. You do not have to start paying on that interest until after that grace period happens. So this is just an example of where interest rates sit now on the federal lending program. So this is for loans that were dispersed after July 1st of 2024 and up until July 1st of this year. So if anybody's dispersing any loans for the school year that is currently happening, this is what the rates are. So for subsidized and unsubsidized loans, the interest rate hovers just below 7%. And for graduate students, that bumps up a little bit, goes to 8%. And then PLUS loans, which we will talk about in a minute, are hovering around 9% right now. All right, so now we're going to talk a little bit about the Federal Direct Plus Loan Program. So these loans are available to different individuals than just like the blanket subsidized, unsubsidized direct lending program that's available to undergraduates. Direct Plus loans are targeted at parents as well as graduate and professional students. So anybody in grad school and parents of any student, really. So they're commonly referred to as either Parent Plus loans or Grad Plus loans, depending on who they're being made to. So obviously, if they're being made to a parent, you'll hear the term Parent Plus. If they're made to a grad student, they'll typically be called Grad Plus. So one thing that's a little bit different about these loans than the rest of the direct lending program is that they are credit-based. So that's definitely something to be aware of. So they might not be accessible to everyone. So not every parent that takes out a Parent Plus loan will necessarily be approved for a Parent Plus loan. They can also cover up to cost of attendance determined by the school. So in terms of the lending limit, that's what you're looking at. it can basically cover up to cost of attendance, which in a way is nice. So in some ways, similarly, private student loans are available as well. These are also credit-based, like the PLUS loan. They're offered through a number of different institutions. They might be offered by banks or credit unions, as well as state agencies, as you might have heard, like Maine administers the Maine loan. So that's one that is there. So usually how that works is the student is actually the borrower, but they need a credit-worthy cosigner. Because the way private loans work is there's no collateral. Like if you were to take a private loan on a car, education doesn't have that. So they need to have a credit-worthy cosigner, like a parent or a grandparent, for example. So another thing is to definitely do your research if you're considering private lending. You'll want to know obviously what type of interest rate is being offered. Is it fixed? Is it variable? What is it based on? Is it based on credit? Is there a guarantee fee? Is there that fee that's basically being taken out at the origin of the loan? This can be pretty common in private loans, not always the case, but it is common. So definitely something you would want to know about before you decide to sign on the dotted line. And you'll also want to know about the repayment options because the repayment options are pretty sweet for the direct lending program, the federal direct lending program. So don't assume that those exact options are going to be available with a private loan. Definitely understand the terms of the terms and agreements before you take out the loan. And then otherwise, credit can impact rates and approval for these loans as well. So the interest rate might be dependent on credit score. So when you're considering how to get your financial house in order prior to sending your kiddo off to school, you'll want to consider things like debt to income ratio. So what do you have for total amount of debt compared to the total amount of money that you earn each month? And then generally your credit score, because that can impact the rates that you're going to receive. We do have a lot of information on our website that's I find super helpful regarding private lending. So I'll share that information and follow up as well. It's right here on this slide. So just information about private student loans, as well as a list of main lenders and what programs they have. Alrighty. So yeah, this is another link to that as well. And then just a quick little snapshot of some of the information that I talked about when you're looking at federal lending and you're looking at private lending. This is an infographic directly from federal student aid. But we do have a lot of our own useful tools available on our website, just holistically about borrowing. Alrighty. Something else that we like to make sure people are aware of is just, not borrowing more than what they can afford. Because it can be a difficult conversation to have, especially when a kid has a very set idea on what school they want to attend. But we just want to make sure that it's achievable for everybody and that the immediate decision isn't impacting your life forever, very far down the road. There's, obviously a lot of time for student loan discussion. The earlier you start, the better it is. But we have this really great tool that's available on our website that helps kind of spur that conversation. It'll give you kind of a forecast of how much is really affordable for you to be borrowing. It allows you to edit interest rate, repayment periods, as well as basing it on an expected salary once your student graduates. So what we usually suggest that people do is they hop onto this nifty page called Career One Stop that actually gives salary information for anybody who's like maybe starting in an industry in a particular area. It'll tell you this is likely what you're expected to make the first year that you're working. You can plug that in, and then it'll give you an idea of what you can really afford for student loans across the span of your education. Another way to look at that is if you've already borrowed money, you can enter that information into this calculator as well. And it'll tell you, what type of salary you would need to be able to be comfortably supporting that amount of debt. We do recommend that it's never more than 8% of discretionary income. So definitely something to be aware of. But really great information that goes along with this calculator. And again, it's right on our website. Alrighty, so that's what I had for you folks today regarding the financial aid offers piece and talking a little bit about student loans. So does anybody have any questions for me right now? Flo, is there anything else that you wanted to share, that you think is important information?
Basically, we have appointments. We're gonna have virtual sessions next week, right? Is that we have virtual sessions for individuals to join us online? And I'm also at the school, so if you have any students who need help with offer letters, filing the FAFSA, we're here to help. But we don't have any questions right now. Actually, we do have one, Q&A. Oh, somebody has a question, but they said I have a question. So, Susan, do you want to turn on your mic and let us know what your question is? Because you didn't write it in the chat. I wonder if they're still here. They just wrote, I have a question, but there was no question. So,
I, yeah, I think that because it's a webinar, I don't know if she has the ability to speak
oh,
or if
she said
she,
I can't find the mic. Okay.
yeah, I don't think that she has the ability to unmute. What I'll do is I'll go ahead and stop the recording real quick. Let's see. Stop recording.